What's going on, everybody, and welcome back to the channel. So today I want to talk about FUBOTV stock because they just released their Q4 and full year 2020 report. Now, as you all know, I'm very bullish on Fubo stock because I feel that they're actually disrupting the intersection between live sports and sports wagering. So for today's video, in part one, we're going to take a quick look at the stock price and how it reacted to the news. In part two, we'll take a look at the actual earnings release. And then in part three, we'll do an updated valuation analysis, and I'll let you guys know what I am personally doing with my position. Now, as usual, there will be timestamps down in the description, and I will have the link to my Discord channel in the pinned comment, so be sure to check that out if you guys want to. And you guys may also notice that I am rocking a new crew neck that I just got, Melvin Capital, full-time short seller 2021. I thought it was pretty cool, so I had to cop one. But with that being said, let's get into the video. So as you can see here, there was a pretty decent sized sell-off after the earnings were released, with the stock falling about 6% after hours. Now, I wouldn't be too concerned with this because they were up 8% the same day, and even though this was a good earnings, I wouldn't say that this was a 10 out of 10. Now, we can see that since going public, they're up an incredible 330%, so even with the pullback after hours, you're still up big if you got in early. Now, if we zoom into the last month, they're still down about 15%, and if we go back to the all-time high of $62 a share, they're down almost 32%. So if you've been waiting for a dip to get in on FUBOTV stock, then this may just be what you were looking for. So when it comes to the earnings release, we already knew, or at least had a good idea of what to expect, since they did release preliminary results back in January. So for the fourth quarter specifically, Fubo crushed it with revenue coming in at $105 million. Subscription-based revenue was up 91% and advertising revenue was up more than 150%, giving them total revenue growth of 100% year over year, which is just phenomenal. Now, the final key metric for Q4 that I want to touch on is the net loss, because in just the fourth quarter alone, they lost a massive $168 million. That's more than 150% of what they brought in for revenue, so I'm not gonna lie, this is definitely a concern that a company making $100 million could lose $168 million in the same quarter. Now, outside of the massive net loss, it was still a pretty strong quarter for Fubo, as they saw explosive growth across pretty much every metric you could look at. So what I want to do now is turn over to the full year results and then take a look at the 2021 guidance. So diving into the full year results, revenue came in at $269 million, representing growth of about 75% year over year, while subscriber growth came in at 73% with a total of 550,000 subscribers. Now, for the key user metrics, ARPU, or average revenue per user per month, increased 17% year over year to $62, while total content hours streamed increased 82% year over year to almost 550 million hours. Now, the only dark spot that I could find for full year earnings is again the net loss. It almost hurts my eyes to see this, but for the full year, they lost a whopping $570 million, which is just painful. Now, for 2021, I will be watching their net loss very closely. I totally understand and I get it. They want to focus more on growth than profitability, which I can totally ride with, but they need to at least show some sort of improvement in terms of becoming a profitable company. In 2021, I really don't want to see revenue of $450 million with a net loss of $650 million, because then I may have to rethink my position. I'm not saying I'm going to sell out of it, but I'm going to have to think at it more critically, because that tells me as an investor that there's absolutely no plans to becoming profitable anytime soon. Now, for some good news, I do think it's important to note that from the investor call, they did tell us that they have officially closed the deal to acquire Victory, which is a massive boost to their sports wagering platform. And they also announced that they plan on launching the free-to-play games in Q3 and the actual sportsbook in Q4, which is obviously massive news. This is honestly what I believe many investors, including myself, are really betting on. We all know that the sports wagering market is absolutely exploding right now, and we all want Fubo to have a piece of that pie. Now, looking at 2021 guidance, Fubo's expecting Q1 revenue to come in at $102 million, which would be 100% growth year over year, and on a full year basis, they're guiding for revenue of $465 million, which would be incredible growth growth of 75% year over year. This number doesn't even include any projected revenue from online sports wagering, which means there is a possibility that we could see them either raise guidance later this year or just completely crush this number since they will be launching their sportsbook in Q4. So overall, still happy with the 2020 results and even more excited about the 2021 guidance. So let's talk about the most important part of this video, and that's the valuation. So with Fubo, they're projecting 2021 revenue of about $465 million, which at today's current market cap of $2.83 billion, this gives them a forward-looking price to sales of 6. Now, in my opinion, I think that's pretty damn cheap considering that they're expected to grow revenue by 75% this year. Now, to put this in context, let's look at some comparable price to sales ratios from DraftKings and Netflix. And to give you guys my reasoning, I really view Fubo as a good combination of these two companies because you got sports betting with DraftKings and streaming with Netflix. So as we know, Fubo has a price to sales of 6 with 2021 growth expected to be about 75%. DraftKings is expecting $1 billion in revenue this year, which would be about 50% growth and currently trades at a market cap of $27 billion, giving them a price to sales of 27. Now, looking at Netflix, they're expecting $30 billion in revenue, which would be about 20% growth, and they also trade at a market cap of $240 billion, giving them a forward-looking price to sales of 8. So obviously, just from looking at this, with the understanding that they aren't direct comps, Fubo does not in any way look overvalued to me. If anything, I would say that Fubo is maybe fairly valued, but in all reality, I personally think it's undervalued. Now, I definitely see a scenario where they absolutely crush their guidance of $465 million, and as long as they can successfully integrate and launch their sports betting platform, I don't really see any reason why they don't exceed the stated guidance. Now, obviously, no company is going to overpromise and underdeliver, especially in the current market conditions, because investors will make them pay for that. I personally feel that their entire business and valuation is being held up on the prospect that they're going to launch this sports betting platform successfully. If there's absolutely any hiccups in this, then I could definitely see their stock either free falling or seeing some kind of correction, because like I said, I think this is the biggest reason why investors are getting into this company. Now, personally, I will be adding more and building up my existing position because I did trim a little over the past couple months to raise some more cash, but it looks like I'm getting back in it. Now, I personally believe that this is still a little bit of a speculative position because there's still that risk of execution, but if we see this platform launch successfully, I could definitely see myself adding many more shares to my existing position. So that's a quick overview of their earnings release and a look into their 2021 guidance. If you guys appreciated this video, be sure to smash that thumbs up button and let me know down in the comments what you guys thought of the release. And with that being said, guys, thank you for watching, and I'll catch you in the next one.